What's going on, traders? In this video, I'm going to break down 3 simple changes that I've made in my trading that have really allowed me to go from taking a payout here and there to taking payouts every month this year, and now multiple payouts in the last month from Topstep. Let's jump straight into it. So before we jump right into it, just so you know kind of who I am as a trader, rather than show you payouts or some screenshots of P&Ls, I'll just let you know that I trade live on YouTube almost every day for free, showing P&L, execution, live everything straight from the platforms that I trade with. This is my YouTube channel right here, Real Deal Futures. As you can see, I have a ton of live sessions almost every day, 9:30 a.m. Eastern, trading straight from my trading platforms. You will be watching me trade a top 1 futures account on Project X coming up soon. I am partnered with them. I stand to make money as a partner, as an affiliate, so that's important to know as well. But if you use code RDF, I'll link it right here. You can check that out. Straight to funded on Project X, no evaluation. Along with that, I also run a 100% free trading Discord. A lot of great members in there. I think we got almost 2,000 members, 1,900, 1,800 members, where we're talking markets, talking everything involved with trading, letting you guys know everything that goes into my trading, 100% free. Feel free to check all that stuff out. Links will be down below. So let's go ahead and jump into it. I have a nice box on my chart covering 3 things that have really helped improve my trading this year. And I think as we progress as traders, there are certain things that we're going to adapt to. There's certain changes and adaptations to the market, to our mindset, to our own trading that we're going to improve on. And I think these are some small things that have held me back a little bit coming into this year that I've really started to lean into, that have, again, really drastically improved my trading, my results this year, and allowed me to go from, some inconsistent payouts to some really consistent payouts, now coming into multiple payouts a month. So let's jump right into this. The first one on this list is going to be understanding risk to reward, lowering it, and increasing win rate. And I'm not going to make this video all about risk to reward. I'm going to get through this one pretty quickly. If you want to check out the past videos, I've done some on risk to reward. But essentially, really doing the research, doing the math, and understanding that risk to reward alone does not provide an inherent edge in the markets. So what I mean by that is a high risk to reward or a low risk to reward in random market conditions with random entries, no spreads, no fees, no commissions, you will still end up break even with a positive risk to reward. You'll end up with a lower win rate. With a lower risk to reward or a negative risk to reward, you'll typically end up with a higher win rate. That said, it really gave me the freedom and flexibility to just look at my system, my results, and not do it through this lens of I have to have a 3-to-1 risk to reward or a 2-to-1 risk to reward, because that in itself is not helping me. It's not providing me any inherent edge, right? I'm asking more of the market, maybe based on my entry, my approach, the way that I structure risk. It's not going to be best for me. What I've found for me is lowering my risk to reward right around that 1-to-1, sometimes a little positive, sometimes a little negative based on the market, and being able to grab profit in this kind of volatile, difficult market conditions that we're working with when I see fit, when it makes sense, rather than holding for this arbitrary 2-to-1 or 3-to-1 risk to reward, has worked out much better for me. It's allowed me to take more profits, have more green days, increase my win rate naturally by doing that, and again, increase confidence, increase my winning streaks, reduce my losses, and reduce my red days and losing streaks, right? This is going to be unique to the trader, right? There's not going to be a one-size-fits-all, but I encourage you to try to let go of some of what you have heard maybe coming into trading, right? Which is you need to have a positive win rate. You need to have a 2-to-1 or a 3-to-1 win rate. Risk to reward, a 2-to-1 or 3-to-1 risk to reward. Why is that? Question, why is that? Does that give me an edge in the market? Is that better? The answer from a complete math perspective is no. There is no inherent edge in risk to reward alone. There's no benefit in running a higher risk to reward over a lower risk to reward if you are just looking at risk to reward alone. Look at your system, look at the way that you trade, your approach specifically, and decide if you are trying to grab too much out of the market and you're holding on to some of that that belief that might be incorrect, might not be the best for you and your system. Again, lowering a risk to reward will naturally increase your win rate. It will reduce the losses. It will reduce the consecutive losers that is often associated with a really high risk to reward, low win rate system. and in turn potentially boost your confidence, allow you to take more wins, more winning streaks, and work with really tight drawdowns and max loss limits that we have in prop firm accounts, right? Because I am trading prop accounts. That's primarily what I'm talking about here in my content. So let's continue on. Next up on this list, I have taking a damn payout. Now, there's a lot of different schools of thought on this, and I will tell you where I land, but also that I respect the strategy, the approach of not taking a payout. I'll tell you that up front. This is going to be, again, different for everybody, the way that a lot of things are in trading. But for me, what I've found is taking a small payout when I become eligible, or at least not holding out for this large arbitrary number, has been helpful. It's allowed me to take more payouts more frequently. It's allowed me to take more total payouts in general as far as dollar amounts are concerned. But also it's prevented this very frustrating situation that a lot of prop firm traders get into, which is running an account up into profit and holding out for this massive payout, for taking a max payout, for taking out some big arbitrary number. Now, there's an obvious downside of taking small payouts or taking more frequent payouts, which is you give yourself less room to work. You do cut into that buffer, right? That working capital that we have. If we're starting, let's say, with a $150K account, maybe we have $6,000 of working capital, for an example like Top 1. And if you just work yourself into a small profit, you just are meeting the minimum, taking that full payout is really not what I'm talking about, right? And killing the account and putting the account at risk. What I'm talking about is not setting yourself up right from the bat to say, I need to make $10,000, $20,000, $50,000 in this account to take multiple max payouts, and really putting yourself in a situation where you may run the account up and be able to qualify for a really big size payout, not take it, and then run yourself back down to take a much smaller payout, or worse, in the story that I hear so frequently, which is I ran the account up into profit, I wanted to hit $20,000 or some arbitrary number, and my ego didn't let me take a payout, and I ran it back down to the ground. I blew the account in 1 day or 2 days. So again, there is going to be a difference here as well when it comes to beginner traders, traders that are earlier on in their journey, and more advanced traders. And I think especially if you've never taken a payout at all, right? Or maybe you've only taken 1 or 2 inconsistent payouts. Taking a payout when you become eligible can build your confidence, right? And again, a lot of this I'm talking about from a practical standpoint, not just the math, not just the risk management itself, but taking a payout, making that money real, recouping your initial investment in that account can put you in a much more risk-free mindset, a much more calm, cool, collective place to continue trading, right? So I think a lot of guys do become eligible. Taking a payout that would clear them of everything in that account and maybe much more that they've spent in that initial investment, give them some working capital, real money in their bank account to be able to reinvest, to purchase more accounts, to be able to scale that way, maybe across multiple firms. That's a benefit. As you get more advanced, does it always make sense to take a tiny payout or to keep taking max payouts and put the account at risk? No, probably not. You want to start to scale. You want to work yourself towards a live account. But again, if you're struggling, and especially if you've made it to qualify for a payout with one firm or a number of firms, and you've ran yourself back down into the ground and you've never taken a payout, I would think about taking a payout. Again, not financial advice. I'm not a financial advisor. I'm just an idiot here from YouTube. No suggestions or recommendations to do anything. But this, for me, has been helpful, right? Now, as I am more advanced and I've gone through the process of taking multiple payouts from maybe the same account multiple times, I am scaling, right? I am holding out for larger payouts. I'm building more working capital. I'm scaling that in that account. So that's my thought process on it. Again, I fully respect the guys that say never take a payout, work towards that live account right off the bat. But again, for the more beginner trader, for the trader that's struggling, that's been in that position before, pay yourself, make it real, recoup your investment. You put yourself in a great standpoint to say, I've doubled my return on investment, maybe just taken a small payout on this account. I've covered multiple failed, challenges or blown accounts, straight to funded accounts. Now I can trade this risk-free. So consider taking a damn payout. And number 3 is adjusting for volatility. Now, this seems like a simple one. It seems like something that we should all know how to do, but especially after last week and the recent wild volatility that we've had in these markets with the new administration, this is really important has been really important for me in my trading, but what I've seen the best traders do. There's nothing wrong with trading through high volatility times in the market, right? There's nothing inherently wrong with it, in my opinion. But there is a really important adjustment that has to be made, which is adjusting for that volatility. And that means oftentimes sizing down, widening out stops or targets, right? If you are running a fixed stop loss and fixed take profit day over day, a number of points or ticks, I think you could put yourself in a really tight situation when volatility increases, right? Really, really drastically. And this isn't something maybe that has to be done for a lot of traders every single day, but I think taking a look at how the market's moving, whether you are using a measurement tool on TradingView or whatever your platform is on Project X, you are using the average true range in ATR to understand where we're at for volatility on that day, and then adjusting, saying, hey, maybe I'm trading 8 micros, for example, on NQ, on any other day, but the volatility here is twice as much as any other day. I got to decrease that and widen out my stops or targets. If you fail to do that, if you don't do that, oftentimes what happens is you're just trading way larger size with way larger stops and targets, and your system doesn't stand a chance to play out in these market conditions. So I would encourage you, and what I do personally is I just get twitchy with that measurement tool, right? I click the measurement tool in TradingView. I measure out price action. I measure out, extensions and retracements, kind of what legs in a trend, or maybe what the opening ranges look like, right? The 5-minute, the 15-minute initial balance, and kind of compare that to what I'm usually used to, and that kind of builds my frame of reference. There's nothing wrong with using the ATR. The ATR is not a predictive type of indicator that's going to tell you overbought or oversold or anything like that. It's just measuring the volatility. And if you attach it to your chart and you watch it day over day on the same trading time frame, which is important, you can get a feel for where you're usually ending up for your trading session. Maybe you're trading NYSE Open the way that I do at 9:30 every day, and you'll get a feel, okay, it's 20 on my trading time frame, okay, for the most part. It's alternating between 18 and 22. If all of a sudden you one day see that it's 45, right, at the open, your standard size of position and stop loss and take profit is just not going to be appropriate. It's going to be way tighter and larger size for that volatility. And adjusting for that is really how I watch the best traders function, and how they're able to capitalize on those large market movements without just getting chopped up, without getting the direction right, their trade right, but because they're running a stop loss that's half the size, they're getting stopped out. So consider finding a way that you're going to understand volatility in the market for whatever instrument you're trading. Do something consistently every day, and then be able to figure out how you're going to adjust for that volatility. How are you going to size appropriately, widen out stops and targets? So guys, I'll wrap it up right there. Again, I'm trading live 9:30 a.m. Eastern almost every day on YouTube, 100% free. I run a 100% free trading Discord, and I trade with multiple prop firms. You can use code RDF at all the major firms if you want to get the best deals. For Top 1 Futures specifically, we have 50% off and an entry to win one of 5 50K elite accounts. You guys want to learn more? Again, hit the links that you're seeing somewhere on this. Hit the links down below. And lastly, guys, remember, I'm not a financial advisor. I don't provide financial advice. I'm just an idiot here from YouTube. Do your own research. Make your own trading decisions. Trading's very risky. Most traders do lose money. Read CFTC Rule 4.41 on simulated trading and the affiliate and partnership disclaimer that says I stand to make money from links in my content, like that code RDF. Talk to you guys soon. See you live on YouTube.